Hey guys, thank you so much for joining us this beautiful Monday morning. We recently had a LevelUp event here at the Chamber where a local attorney, Luke Deaver, actually went through business succession planning and the steps to succession planning. It included examples and the planning phase and really just some really good information about business succession planning. So as always, if you have questions, feel free to reach out to us here at the Chamber. You can give us a call or you can email us here at info@holdridgechamber.com. So without further ado, let's get to Luke's LevelUp event on business succession. Hello and welcome to the Connect podcast, a podcast by the Holdridge Area Chamber of Commerce.
The general topic at 50,000 feet is just business succession. Lori and Adam asked me a while ago. They had a chamber event with other chamber directors, and it's really kind of as I understand it, a missing need in a community, because to keep communities vibrant, we need the next generation of water, insurance, construction, laundromats. And so we don't want all of those to leave our towns. And so how can we kind of keep that in? So big picture items we're going to talk about: finding a buyer, which is succession plan, finding a seller, how to value a business, the maybe nuts and bolts there, examples and questions and answers. Question and answers can happen anytime. So, and I'm not, by no means am I an expert. I just help people sell their businesses because that's what I do for a living in the sense of the law side of it. I have done this myself. I have purchased 3 retiring attorneys' practice and what that looks like, and I'm happy to answer questions associated with that. My business partner, Nate DeWald, is from, he went to high school in Holdridge. I went to North Platte, so I graduated law school with Nate. We were college roommates after going to Doane. He went to Sandhills Publishing, if you've heard of them. He actually helped launch Auction Time, if you've heard of that website. And then I went to North Platte, worked at a trial office, did court cases for 5 years, but I didn't really love it. We both came here in 2011, and Kent Person was foolish enough to hire us. So we worked for Kent for 2 or 3 years. We bought him out. Bill Tringe approached us and said, hey, I would like to retire. What can we do with that? So he joined our office for a year, and then we bought him out, and then he's office shared for 3 years. And you can't buy a judge's practice, but when Tim Haft, now Judge Haft, went from county attorney's office to the bench, as they call it, we didn't buy him because that's unethical, but we worked with his clients to transition them. And then Rick Calkins is an attorney in Alma who we've merged with. So finding a buyer, I don't know if that maybe you got an employee that's in the hopper. That's usually where you kind of start, but kind of who is your audience? So like, these are qualifications, like, right? If I'm going to find a succession plan for me, well, they have to be a lawyer. Like, that's required. Obviously, you can't do it if you don't have the law license. So you sometimes your audience is limited, but sometimes if you can bring people into the business before they take it, you can get a feel for them and they can get a feel for you and the business. So that's a natural starting spot. But just look through the parameters of your business, right? Stephanie had to have 2 months of training or certifications to do the insurance thing. So you, as Shelter was looking for its next Holdridge rep, and if you ever are involved in looking at hiring or bringing somebody on as a succession plan, it's know your audience. So I helped with the coffee shop here in town when it switched from 4th Avenue Coffee. Mostly what I did there was just set up the company, do some purchase agreements. But I help with restaurants, help with realtors. One way to do it is recruit an apprentice. So Kent Person, as an example, was advertising in the Lawyer magazine for the state of Nebraska, is how Nate found out about it. Nate was in Lincoln. They wanted to get out of Lincoln. He's from Holdridge, seemed natural, interviewed, did the thing. So then Nate came on in Holdridge, and they entered into an agreement where Nate, at that time it was just Nate, because he beat me by a couple months, was going to buy the practice, and that's how that transition can work. And in a small town, the biggest thing probably is making sure the person's willing to do the small town thing. There's a lot of advantages. Sometimes we are too humble in small towns to sell the advantages. When I work with my colleagues in Lincoln and Omaha, they don't believe that we have the type of work we have and we can do as well as we do, humbly, just in the sense of they kind of assume everybody does the same thing, which would be like the entry level work or whatever. And when I tell them I'm doing things that they may not understand or perceive. So just being bold with what your line of work, what opportunities are available, because that might help soften someone. My wife was from a small town, so the sell to her was not hard because she wanted to be back in a small town. And so we're open to it, but making sure that matches. And one of the things, and this is kind of, so my business partner and I did this similar talk, but it was more geared to lawyers. So we talked to lawyers who are terrible business owners typically, and they're even worse at managing employees and succession plans. So I went and talked at the Bar Association annual event last year with Nate, different talk, but same concept about trying to get older attorneys, because older attorneys don't replace themselves. They usually just die, and that really can impact a small town. When you don't have anybody in the town to run the title insurance company or to even be a prosecutor or defense attorney, because that impacts your county budget, because if those counties have to hire outside the county, now they're paying travel costs, and it really can impact the budget of a county. That's sortation. So if these older attorneys can replace themselves, and the big thing I had to stress to them is you have to be willing to invest in a younger apprentice. And that could be time and money. I wouldn't have been able to afford to come to Holdridge if Kent didn't say, I'll pay you a salary for the first year. And then after that, you got to figure out, whether you're going to make it or break it. But I couldn't have moved here, didn't know anyone, had 5 kids, and said, I'm willing just to see who's going to call that day to pay me. Well, that would have just never worked, right? So you got to invest in someone, time and money to do that. Finding a seller. So this might be different for different demographic groups. How do you find someone to establish your career? So you're a young person or a person switching careers, and how do I get into that career? So for me, when I graduated law school, I graduated prior to the '08 recession, but nobody was hiring. And so I sent out 100 letters to 100 different law offices and our county attorney's offices. And I got like 3 or 4 callbacks in 2 different states, because I was licensed in Colorado too. And did interviews, couldn't get a job, finally landed a job in North Platte. My wife was a part-time, 3 days a week student teacher who taught music at the school. And she made more money as a 3-day teacher than I did as a lawyer. But you just scratch, claw, fight just to get a mentor, get into an industry. Typically, if you work hard and you can get an industry and you get the skills, then you become much more marketable. And so after year 2 or 3 of being a lawyer, I wasn't calling people, but I was having people call me to say, hey, we'd love to have you come join our office. Would you think about it and stuff? And then the world switched. I'm like, where were you 3 years ago? when you wouldn't even return my call. But as a young person, I just say that so that people aren't discouraged by trying to land the first gig and getting into an industry that you think you like and you might succeed. And then finding somebody who's going to be willing to teach you. Now something that may be kind of more interesting. How do we value a business? Okay, there's no magic formula on how you get there. There's a couple traditional ways of how you do it. But the law likes to say it's a willing buyer and willing seller. And what does that equal? That equals what we call a long arms transaction. That just means we're unrelated. There's nothing motivating us for this transaction other than I want to buy and I want to sell. And there's 2 general approaches: an asset value approach, or value of the income it produces. The value of an asset, or the asset value, is what are the things that I'm selling, like the inventory, the personal property, the real estate, possibly a customer list. What is the value of that? And then the value of the income approach. You might have heard of EBITDA, the formula, which is earnings before income tax, depreciation, and amortization, which is just like profit, fancy accounting formula for profit. And you can base an income, and this is how bigger companies, but smaller companies get sold, is when you hear about big acquisitions in like Fortune 500 companies, they're all doing it off of a value. Asset value applies to most businesses because, again, most businesses have some assets and they're always worth something. So that's that approach. And the income approach is the value of the business above its assets. I'm kind of repeating myself here again, but it's your physical assets plus your goodwill. And like I said, with your accounts, Gary, you might have a predictable, stable cash flow. That's worth it to somebody who wants to step into that line of industry. And usually at that point, you're relying on experts, accountants or otherwise. I do what I call desktop appraisals of a business. I'm not going to certify it. I won't testify into in court. But if you come in and ask me what's my business worth, I have spreadsheets where I could give you some analysis. You'd give me the hard data, the balance sheets, the profit loss statements, and I can analyze it and tell you. But all of that is meaningless if you don't have a buyer, right? I can tell you what I think it's worth, but if you're like, well, no one will pay that, well, then that's not what it's worth. Now, it may just set your parameters like, I think I should be looking for somebody who's going to really pay this, and then we need to, go effort to figure out a network to bring a buyer. But it's not worth it if no one will pay for it. So, and that's one of my favorite things I do is I love analyzing financial documents and coming up with spreadsheets to say what it might be worth, or at least give a person a starting point. Okay, so here's some examples, and I can talk about other industries too if you would like. So the bakery, I've helped a couple of different bakeries in the area. So our area is, I primarily do business law. I do estate planning and real estate and corporate work with business as well. So those are the areas I do. Business is by far my favorite. So I just love helping new or old business owners kind of do what they want to do with their business. So I've done bakeries, I've done insurance businesses. Insurance businesses are one that's typically always a goodwill, an income approach, because they have what you call a book of business. And it does have, they're the bad insurance agents, if you will. You're not a bad one, but the bad insurance agents, as I've been told, have like an 80% retention, meaning 80% of their clients come back each year. It's kind of just a renewal. They write a check, that money comes in, and the more effective agents are in the 90+%. So they have very reliable cash flow, and they have to do a lot to retain that, but that business is ready made to say, okay, last year I did X dollars in revenue, I did Y dollars in profit. Let's say it's a $100,000 profit. We think it's a multiple of 3. The goodwill for that business, if it's a multiple of 3, is $300,000, just in that very simple math. And that's the way we write about it. And then usually it's a $300,000 for the goodwill plus X for the building, X for the cars, or whatever is being sold with it. I've helped chiropractors. I've helped other lawyers too. Actually, I've done legal work for lawyers. Because not all lawyers do what I do. Some of them are, criminal attorneys or trial attorneys, and they'd like to bring somebody in. And those are the harder conversations because they don't like to trust me. I told them, like, well, I don't think you're going to get anything for your goodwill. Well, I'm killing it, and I've been doing this for years. But like in our industry, well, the competition he can just set up his own shop, and it's not a harder climb in the sense of having accounts and recurring revenue. Well, thanks so much for the time, everyone. Got any questions, never hesitate to reach out.